Hello, everyone. I'm Flora Swai, and in our podcast, we tell our viewers and listeners, Karo scam ko identify. Let's just stop, think, and verify. In this episode today, which is currently being done in the week of World Investors Week, celebrated between the 6th and the 12th of October, here we are decoding with our panel of experts on how to identify the scams, how to smartly invest and not fall prey to any fake promises. What are these red flags that an investor should immediately watch out for?
जात न पूछो साधकी, पूछ लीजिए ज्ञान, है ना? That is very important. When you're identifying the influencer, just know their qualification. Is a genuine, है ना? Person is giving a genuine advice, है ना? If we take care of these things, I think we are able to create a happy customers, happy investors who can get benefit out of all this.
If you had to cite a specific example, a case which stands out in your experience where people have been conned, scammed, do you mind sharing that with us? And what has been the lesson learned? What has been the bottom line?
He'll ask me, I'll say him no, then he'll miss out on something, right? So two words here. FOMO is one thing, and that's the investor psyche. Second is the pyramid scam I told you. You are referring people and you are getting referrals, and one fine day the company shuts the operations and vanishes.
He's absolutely right. Don't want to discuss money with even closest friends or relations. And
Right.
the good advice we can at least share with all of you is free to ask questions with the even closest one or even to the public who is advising you.
Just one sentence advice that if you had to give to an investor.
Invest for long term, ignore the noise, and think for your goal, and be an informed investor.
So we call it SLR. First is safety, then there is the liquidity, and third is the return.
Every individual, every citizen has to be an investor in right earnest.
Hello, everyone. I'm Flora Swai, and in our podcast, we tell our viewers and listeners, Karo scam ko identify. Let's just stop, think, and verify. In this episode today, which is currently being done in the week of World Investors Week, celebrated between the 6th and the 12th of October, here we are decoding with our panel of experts on how to identify the scams, how to smartly invest and not fall prey to any fake promises. So between all the three of you, you have over 85 years of experience in this sector. Over the years, how have you seen investor behavior evolving in the past couple of decades, especially with the digital space and social media in play?
Historically, in India, investment has not been ripe as used to be a case. People were, or particularly middle class, were not so keen or rather not knowing about the different investment products in the country. But of late, a momentum has been taken up and rather very rapidly. We've seen the last 10 years, things have changed dramatically. And more so in the case of young professionals and young generation, Gen Z, whatever you say.
And millennials, yeah.
They have been very vocal and very affirmative that they have to be investor. In my generation, we were more focused on the safety of the money, and rather we were very clear we will not make the investment where there is any risk. So the products were tailored in such a manner that risk was minimum in most of the products. But one thing is very clear that in investment, if there is no risk, then investors should not expect high return. If you expect high return, then you have to understand risk and then to take it. But what is typically happening in India that people are not understanding the risk factor in majority of the products, and herd mentality is there. I am investing, my colleague will also invest. I don't know what the product is.
Absolutely.
I got an advice from one of my colleagues, two friends advised it, so the others are following me. That I think is not the right path to be a successful investor.
Absolutely. Mr. Sabanwal, is that also your assessment?
And every individual has a different needs. We have a different risk-taking capacities and has a different time horizon. So accordingly, we have a different product in the financial industry. When we call it financial industry, include banks, insurance company, mutual funds, stock market, all put together. They have a different types of products, and different products are meant for the different types of investor and different types of horizon. And if you want to invest for a shorter period of time, then probably the fixed income instruments will be a best option. But if you want to invest for a longer period of time and where you want an inflation proof return, then definitely you have to look into the different products altogether, which can be market linked or so. So as per the need of the investor, as the Suryakanji has told, that we follow the herd mentality. Today is the classic case, the people are investing left, right and center and in gold and silver. Because in last 1 year, the gold and silver has given a phenomenal return. Whether the same type of return will be continue for another year or so, nobody knows. But if there is a need and if it fulfills your requirement, only then you should invest in those products. Because the fund has given a good return or the precious metal has given a good return, that should not be the logic to investing in that asset class. If it is a part of your asset allocation, only then you should look into those product as such. So that is a premise. We have to understand our risk. In financial industry, you said KYC, know your customer. What is know your customer? To understand the risk profile of the customer, to understand the time horizon of the customer, and understanding the circumstances of the customer. And if we evaluate on these principles, then we are able to give the right type of product to the investor to meet his needs. That is called a right selling and a right way of investing.
Absolutely. KYCs are such a big deal. We get mails, we get WhatsApp reminders that, need to update your KYC. Moving on, Mr. Saini, you agree with what Mr. Sabharwal is?
Yeah, both of them. And I agree that investor behavior has changed considerably, steadily in last decade or so. And the key driver has been technology for this, digital platforms as well as social media. So today the investor is more informed. In last 10 years back, investor used to rely on traditional methods for investing, gathering information and all. Today investor is more mature, more informed. And social media has amplified it. As Sabharwalji said, herd mentality, FOMO, fear of missing out on returns and all. So here comes an opportunity for us as an asset manager, right, to engage more meaningfully with the investors so that we can educate them and they can take more informed calls while investing.
Absolutely. Mr. Sharma, social media and digital media has democratized financial advice, definitely. But how do we differentiate between credible and questionable advice? How would you define trustworthy financial advice in these times?
Very honestly, it is $1 million question. Not so easy to differentiate between right advice or advice not appropriate for an individual investor.
Right.
What is typically happening in social media, thousands and thousands of so-called experts have grown up all of a sudden. And in some cases, not all, but in some cases, their advice is not attributable to the real advice, but they are influenced, or rather, but you can say they are connected with some entity or some bodies or a group of people who take undue advantage of the normal or retail investors. So it is very imperative now that you should be very much vigilant and alert while looking even in the social media and advices and all these things. And out of context, but it is relevant, I mentioned that a new term, of course, fin-influencer has come in. A lot of people, a lot of new breed of influencer have come in last 5 years or so. But they are not all fair. Just to say to you that TB last 1 year has caught a number of fin-influencers who had vested interest in advising to the general public.
Absolutely.
SEBI has caught them and SEBI has penalized some of them heavily,
Okay.
which goes to convey that retail investor like you and me should not be influenced only by the social media. Mr. Sabharwal and my senior colleague, Mr. Seni, was very right that now social media and digital platform has given you immense place for knowledge, getting everywhere. If you are not happening, your mobile has got everything now.
Yeah.
But at the same time, you should have ability to see that what is the advice, from whom it is coming, and whether they are authorized to advise you. That is more important. Whether they are advised to the general investors, and for authorization, we will discuss separately.
Absolutely. Mr. Sabharwal, given that Mr. Sharma spoke about vigilance, when it comes to these too good to be true sort of schemes or fake promises, at the outset, from the top of your head, what are these red flags that an investor should immediately watch out for?
So continuing with the Suresh Sharma ji's, Hindi mein there is a one kahavat, जात न पूछो साध की, पूछ लीजिए ज्ञान, है ना? That is very important. When you're identifying the influencer, just know their qualification. What is his qualification? Because in financial industry, whether it is an insurance or it is a mutual fund or even a stock market, there is a minimum qualification that is required. If the person is qualified to advise, qualified to distribute that product, that is a basic. And second is, we have to, whether the person is giving, because as I told earlier, everyone is a unique one, every customer is a unique one. Whether that advice is for you, or one advice one size cannot fit all the people. The same way one advice cannot fit all the investors. So whether that advice is relevant to you, that can be relevant. Like we as a AMFI, we have launched a campaign, mutual fund sahi hai. But which mutual fund is sahi for which type of investor, that is also very, very important.
Correct.
All mutual funds are not meant for all type of investor. There is a different set of products which are meant for different set of investor. People who want to invest for a shorter period of time, mutual funds are liquid product, liquid or money market products are then. People who want to medium term investing for 3, 4, 5 years, we have a hybrid products for them. People who want to invest for a longer period of time, for 5 years, 7 years, 10 years, the equity funds are there. So as per the time horizon, we have a different types of product. And secondly, third is the risk. What type of risk the investor is ready to bear. So English, there is a old saying, trust in God, but lock your car. So it is a responsibility of the regulator. And it is a responsibility of the financial institution that they make you aware, but it is your hard-earned money. Much more responsibility lies in the individuals. Whenever they want to invest, whenever think of investing, they verify that the person is a genuine, and person is giving a genuine advice. And if we take care of these things, I think we are able to create a happy customers, happy investors who can get benefit out of all these.
Absolutely. Mr. Seni, speaking of the red flags in the mutual investment space, in your experience, what are the common scam patterns that you have come across?
So there are many, in fact. So in the recent times, we have seen many-fold increase in these scams in the BFSI industry, not only the relevant industry we are talking, where the investors have lost tons of money, right? And these scams are common, more complex. Just to give you a couple of examples, what is the impersonation scam? Where you post that you are from an agency, from a distributor, somebody's identity.
You become someone else.
Yeah. And then you force the investors to make investment into some accounts which are not registered with that. So that is one. Second is the data theft, or in terms of phishing emails and all, where a pop-up happens in your email and a link has been sent to your WhatsApp, right? Where you're being asked for your personal information, your financial information, which is misused later. So I agree with Sabharwal ji that knowledge or awareness is the best defense against this. You need to ask for identity if somebody is there. If there's a red flag, you need to ask the identity. Please prove your identity. You need to check the authenticity of the platforms before investing, before it's too late. And I see an opportunity for us as an industry player to educate more and more investors on these issues so that we can limit the wrongdoings and the loss to the investors. So education is the mantra. Awareness is the mantra for this.
Absolutely. We'll circle back to the awareness mantra that you mentioned. But speaking of verifying the authenticity, Mr. Sharma, a lot of times AMFI India or SEBI logos are, such an extent that you cannot differentiate between a fake logo or a genuine logo. It has happened to me a lot of times when people are phishing or scamming. The bank logo is projected to such an extent that you cannot basically make out. So how does one verify and identify before investing?
The most right way, I think, that will be to go to the authentic website of the institution. I personally feel that, of course, what you are saying is absolutely right. But then people are casual. They are not serious while looking at the information. Serious simply means you have to be alert and aware while even looking at the information. Then come the source, which source it is coming. So when you go to the particular website or authentic website of the SEBI or for that matter AMFI and all mutual funds and banks and RBI RSA, you will be better placed to get the authentic information. What typically happening today that even youngsters they are in very quick mode. They don't want to go into the deeper into the things, or they simply want just some information has come, some mail has come, and that has got attractive offer, you should go to it. One thing I want to make it clear that nothing in this world is free. And secondly, most of the frauds, not all, but most of the fraud are happening only because of greed. Somebody is promising you double your money in 3 years. Somebody is promising to give you 25%, 30%, 40% every year. It is just next to impossible. You should understand it. You will get return, very handsome return over a period of time. Investment grows, but it grows with the time. Investment needs your patience. And of course, at the same time, be an informed investor, which simply means before taking any investment decision or looking at any information or advice, you have to see that it is coming from the proper and authentic channel. That is more important.
So you're basically saying that it's not T20 cricket, it's a test match.
You
need to spend
investment is a test match.
and plan out both your innings.
Some people get very good return even in T20. That might be a case.
Yeah.
Because just Mr. Sabharwal was mentioning that gold people have got anything like return like it, but it may or may not sustain.
Correct. So sustenance is the key here. Mr. Sabharwal, Mr. Sharma mentioned greed. A lot of times criminals always try to exploit that one emotion in the victim. And here a lot of times scammers rely on fear, FOMO, greed. Or a lot of times it's also a sense of induced unnecessary urgency. If you've got an email where it's all caps in the subject line, or if it's a very urgent WhatsApp message, we tend to respond to it faster, even if it's just very fakely induced. So how do scammers use these emotions to, con people?
Yeah, the greed and fear are the two biggest enemies of a successful investor. If we are able to manage our greed and fear, and then definitely we can get a much better return in our portfolios. Because we have seen cases of digital arrest also, and people are given a ransom. So those types of things are also happen because of the fear in the minds of the investor. And same is true, like Surajji said, that nothing is free in this world except mother's love. If somebody giving you the high return, he is definitely exposing you to the high risks. Understanding those risks is very, very important. And sometime you get the message that you won the lottery. So the money will be credited to your account, but you have to pay the taxes. And the same way, you can get something in the message that your portfolio has been, there's a 1 crore rupees as of now. So this has given us 40% return, but in actual, you have not invested at all. They say if you want to claim this portfolio, reach out to us or transfer this money to us in our account as a tax. Only then we are able to pay back to you. So we have to identify that free is nothing in this world. Everything. So people when say that YouTube is free, or they also earn money from your activity on that. So if that institution is making money out of it, so the person who is telling you that we will give you 30% return to you or give a portfolio, that can also not be a true. We have to manage our greed and fear. This is the basic necessity, and that can only be rid of. That is because of the education. Education is the only way. Because money is that element nobody want to discuss. The things which will not discuss will not get a solution. And we are not aware of the things. So one fine morning we got a call and then we stuck in that call. So the only thing, if we want to get rid of greed and fear, is we have to educate ourselves. And it should be part of the curriculum at the starting in our education in the 8th, 9th or 10th standard, so that the children will be much more aware investor and they should know what means what. And that is the, I think, major reason, because nobody teach money. And we teach physics, we teach chemistry, we teach math, and we don't teach money management. That is a basic challenge, that why people are challenged by these scamsters.
It's very funny because everybody wants to make money, but no one wants to talk about it. Like in our families, we are told, do not discuss salaries, no one should know how much you earn, where you invest. But it's very funny that everyone wants to make money but not talk about it.
Whenever an advice is coming to you, maybe from genuine sources, but a good number of people have a mindset that whoever is advising me has some interest in it. Neutral advice is not only rarity, but even people don't understand and accept it.
Yeah.
We all are doing investor wellness program, touching all segments of the society. A good number of people still, but at the same time, in the beginning itself, we say this is product neutral program. But they will not accept it. They will still back off and they say, ultimately they will market some product, they will promote some product. So this mentality is also very, 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 very difficult to go on.
It's a very tricky case of once bitten, twice shy.
Yeah.
Mr. Saini, moving on to you, all of you have, like Mr. Sharma mentioned, all of you have done awareness programs throughout the length and breadth of India. If you had to cite a specific example, a case which stands out in your experience where people have been conned, scammed, do you mind sharing that with us? And what has been the lesson learned? What has been the bottom line?
There are many. So recent has happened with my friend. I recently moved from Chandigarh to Delhi. So one of my dear friend, he invested 1 lakh in one of the scheme online, with a promise that he'll get 5,000 rupees every month. So a return of almost 60%. He told me after that. And he got the returns for 3 months, and then the company vanished. And when I asked him, when he rather told me, so then I learned that not only he has lost the money, he has introduced 5 of his friends and family members to that. So in financial term, we call it a pyramid scam, where you refer people and you get money, referral money. Okay, he has not only lost his money, but his friends and relatives' money also. So there is also one point in this example. This is a FOMO. Despite being a dear friend, he has not consulted me, knowing that I am in this industry for almost 25 years.
That's the irony of it.
That's the other, because the FOMO, fear of missing out. Okay, if he'll ask me, I'll say no, then he'll miss out on something. Right? So two words here. FOMO is one thing, and that's the investor psyche. Okay. Second is the pyramid scam I told you, where you are referring people and you are getting referrals, and one fine day the company shuts the operations and vanishes.
Absolutely. Mr. Sharma, if you had to cite an example.
Most of the people, he's absolutely right, don't want to discuss money with even closest friends or relations. And the good advice we can at least share with all of you is, feel free to ask questions with the even closest one, or even to the public who is advising you. Because you are giving your money to them. The example I take is forward. His friend invested 1 lakh rupees and he was promised to give 5,000 rupees. Should he not have the minimum courtesy to ask, my dear friend, from where you will earn 5,000 rupees out of my 1 lakh?
Yeah.
This is the basic question we should ask to anyone. Suppose I am promising you 20% return. You have got every right to ask me from where you will earn 30% return. 20% you give it to me, 10% you will get some profit or manage your affairs. From where you will get 30,000? You give me the project, I will also start it.
Correct.
So this, you have to be very blunt in asking questions. If anybody advise you any type of schemes or whatever it might be, you should be very clear and ask them from where you will be earning that level of money so that you can give me return and plus you enjoy the money, remaining money.
Correct. Absolutely. Mr. Sabharwal, you have spoken of digital arrests already, but if you had to cite one instance.
No, there is a, in fact, there is a 2-3 other things which are also happening in the financial industry. That is impersonations. So people are specifically in the financial industry, there are around 1,75,000 crore, which is unclaimed money in banks, in mutual fund, and insurance, and the stock market, which is lying.
1,75,000 crore rupees.
1,75,000 crore. So nobody knows the owners. And there are some, because why that has not happened? Because people have not discussed when they invested in banks or mutual fund or insurance or probably directly in the equity market with their family members. And unfortunately, they died. So then there is no nomination. There is no claim. So why I am telling this? Because we have to discuss with our family, our friends. Only then we can get rid of these type of. Now, people, those money is going to some of the people who are impersonating that I am the legal hire of this person. He provide all the documents and transfer those units.
This is like the other end of the spectrum.
Yes.
This is the reverse now.
Yeah. So that is also happening. So the purpose of these podcast is that not only to aware them, we have to sensitize them that nomination is also very, very important. Now we are living in a technology is, if you provide the PAN number, you can get the detail of wherever they have invested in the mutual fund or insurance. In one click, you can get all the information. So we should tell our family friend or to our family to minimally that this is your own, this is your investments. And then probably so that after you, when you're not there, nobody can take benefit of that. That is another bigger scam which is happening in the financial industry to claiming the unclaimed amount by someone.
Absolutely. Mr. Sharma, you had mentioned about the finfluencers when we began our conversation. And I also started by saying that advice is rampant everywhere. These finfluencers, how do you think are impacting this advice giving space in the mutual fund industry? Are they sort of helping or are they corroding the entire fabric?
What is financial influencer? Simply speaking, financial influencers are the persons who are influencing you to take a particular line or particular type of financial decisions. Why they are taking this particular line, this, not that line, not this line? That's the first question you should look at. I am pushing for a particular script or a particular scheme. You have to look deeper into the things. Why I am only pushing that scheme, not others. Why I'm pushing only the one product, not the other? If that is the case, some might be wrong.
Mr. Sabharwal, what are the boundaries that the influencers should respect while, like Mr. Sharma said, pushing a product or while giving out financial advice?
So there is a old couplets of Rahim, which is Rahman baat agamya ki, kehet sunat ki nahi, janat hai so kehet nahi, kehet so janat nahi. The person who know the market, it's like knowing the chord. He cannot express in words. And the person who is expressing, bhai mujhe pata hai market, how the market will behave, it means he don't know the market. Fact of the matter is, nobody know the market. The influencer have to give this disclaimer that whatever he is telling, that is as per his experience, or the past experience may be true or may not be true. If that kind of disclaimer will be there, then obviously then we are able to giving a right type of education. We are giving a right type of advice to our investing community.
Definitely. Mr. Saini, we have been speaking about social media so much. And with respect to the influencers, do you think there should be stricter guidelines for what these influencers can put out there on their channels? And how do you think platforms like YouTube, Instagram, Facebook, Snapchat, how do you think they should regulate the narrative of the influencers?
Yeah, absolutely. A clear and stricter guidelines are required. In fact, our regulator SEBI has ensured that. And there's a clear defined line between educators and the influencers. If you want to give advice on some products, right, you need to get registered with the SEBI. Right? There has been so many instances where the entities are penalized, their registration has been cancelled. See, these are all the steps which the regulator has taken. So I firmly believe that there has to be a fine line what they can do and what they can't do. So our regulator is efficient, and the regulator has put major checks and measures to restrict that.
All right. Mr. Sharma, moving on to identification and verification. For a first-time investor, how do you think that for them, which is the simplest way where they can verify that a product or a service is SEBI or AMFI verified and authenticated?
Again, the same request I can make to all of them. You have to visit the websites of the regulator and the AMFI, and for that matter AMCs. There, whatever information is available is authentic.
Okay.
It is verifiable. Beyond that, not all, but some websites might be which might have been influenced by giving advice on one or other regions. We should not go deeper into that. They are influenced by some interests, you can say. So for first-time investors, and perchance we are living in this era, everything is available on your tips, wrong or right, both. So why you should not go for the right information or at least the authentic information? So visit the website of SEBI, visit the website of AMFI, visit the website of AMCs, visit the websites of other authorized entities. You will get the best information. They may not be advice, but the information. Then you can take a decision on the basis of that advice or on the basis of that information. And so you have to be alert, aware before taking first step. You are talking about before taking first step into investment. Start small things, small amount, continue for a longer period. Over a period of time, you will start getting experiences. Because I tell you that you start SIP, after 5 years, you can advise me this advice, SIP is not good or bad.
Okay.
So, this is just an experience which is required and which is very crucial in your investment decision for future.
Of course. Mr. Sabharwal, in the part of the decision-making process, if you had to mention any 2 fundamental principles that a first-timer can fall back on, what can they be?
in markets, there are broadly two types of risks are there. One is systematic risk, another is a unsystematic risk. Systematic risk, which is associated with the system. If the system failure is there, or 9/11 event or corona incident is there, so that is a systematic risk. And second is a unsystematic risk. So systematic risk is a part and parcel of the unsystematic, where we are investing, and we should be gone through the do's and do nots while identifying or investing in those instruments or things. So if we are able to control the unsystematic risk, I think the investor is able to achieve his goal much faster way.
Of course. Mr. Saini, speaking of the same decision-making process, and because Mr. Sabharwal mentioned risk, how does one gauge the risk appetite and how important it is to understand the investment goals?
Risk and investment goals, these are two integral part of any financial planning, right? And before making any informed decision, the investor needs to differentiate between two. I'll just give you an example.
Yeah.
If there's an immediate goal, right? You need money in next 2 months, 3 months, 5 months. You can't put your money in a risky asset, right? Your goal is immediate, but the risk appetite should be low, right? And if you have money for the long time, your goal is like child's marriage, child's education, or even your own retirement, then risky assets like equity and all can be considered. So now how to help the investors on this? SEBI, which is a regulator, has come up to help that. There's a standardized pictorial thing which we need to display on our schemes, okay, which we call is riskometer. So riskometer tells what is the risk of this underlying portfolio, keeping in the objective of the scheme in mind, right? It starts from low to moderate to high, right? It is also shown in the color frames, color coding also, where green is less and obviously the red is the highest, right? So before investment, we tell our investors to look at all these things before taking any investment.
Absolutely. Speaking of the same issue, and because we have already spoken threadbare about where do we take the advice from, we talk to friends, we talk to colleagues, and now we turn to social media also. If you had to choose, what would be a safer starting point to take advice?
Professionals, who are the experts. You need to differentiate between the noise, which is in your surround, and what is in. So you need to take advice from the experts before the investment.
You agree with Mr. Saini, Mr. Sabharwal?
Like registered investment advisors, they are authorized to advise you. Then there is incidental advice that is can be given by the like mutual fund distributor or insurance facilitators. They can give you advice which is incident to that business, that kind of advice. But if you want only advice, then probably registered investment advisors are there to can help you to identify to your goal, to identify your risk-taking capacity and align the product along with your risk and return expectation.
And your thoughts on it, Mr. Sharma?
That is why mutual fund is one of the uniquely placed product.
Okay.
In mutual fund, you get the professional advice by paying hardly thousands or hundreds of thousands of rupees on it. SEBI has put a cap on every scheme. So, the beauty of mutual fund schemes are that your money is invested by the experts. You are giving your money to the experts because of the obvious reason that I am not expert. I don't know security market. And the easiest way is to give my money to the expert. He will take decision, and like me, lakhs of other investors are pulling money in that particular scheme. So expert, and that he is also supported by the research team. He is not an individual, he will take the authoritarian decision. There is a democratization of decision making even. Research team will go into deeper into the each and every aspect of the script or the where the investment has to be made. Then recommendations are made. Then recommendations are discussed at different levels, and a decision is taken. So that's why I'm emphatically keep telling that mutual fund is one of the products where you get the expert advice at the least payment, fee or least fee.
Moving on to, because we have spoken so much about investor education, and we have spoken so much about the fact that the scams need to be prevented at all costs, and the key to it is campaign awareness. Mr. Saini, what exactly is Nippon India Mutual Fund doing it? Because I'm aware that Nippon India Mutual Fund CEO, Mr. Sandeep Sikka, is also the chairperson at Amphi India. So you have also mentioned campaigns before, but if you can throw more light into it.
So at Nippon India Mutual Fund, we truly believe that an aware investor will make more informed decision on investment. So we work towards financial literacy programs, and to just give us some numbers, in the first 6 months of this financial year, we have conducted 340 programs across the countries, spanning over 20 states and covering almost 29,000 investors in this. And that includes teachers, defense personnel, even students, like doctors, lawyers, everybody we have covered. And we are also, there was a point that it has to be, the message has to come in their local language. So we have done that also, so that the advice or the message which we are trying to give it to the investor is reaching to the investor in the same language, intensity. So we are committed to that, and Nippon India Mutual Fund and the industry per se is working towards that for the financial literacy of the investor.
That's good to know. Mr. Sharma, apart from Nippon India, how are organizations like SEBI and Amphi India going about in terms of investor protection?
SEBI has attached utmost importance to the financial education and investor awareness. And you might be aware, in the objectives of SEBI itself, the first object is protections of investors' interest. That comes first. Taking clue from that, last 15-20 years, SEBI has done wonderful job as far as financial education and investor awareness is concerned. SEBI has roped in not all the stakeholders of the security market, what my friend Mr. Saini was just mentioning you. Like his entity, every entity in the security market had been assigned a role for the financial education.
Right.
And SEBI themselves had devised lot of new schemes. Because I was a SEBI team in 2011-12, when that for the first time SEBI had devised a very unique scheme of empaneling SEBI financial education resource persons. Across country, around 2,000 plus SEBI financial education persons were empaneled, and after proper training to them, they were given free hand to organize financial education and investor awareness program across country in their own language. Particularly now SEBI has come up with an idea that this much of percentage of program must be in the 2-tier and 3-tier cities.
Right.
That is the way forward, so that we can reach to the masses where it is more required.
Correct.
And of course, the Amphi for that matter has done wonderful job again at the digital platform, at the physical and online platform. Amphi has done a wonderful things for last 5 years. Mutual fund Sahi Hai again was a campaign in the right in the direction only. After that, Amphi has come up with a lot of follow-up and a campaign also, and update your KYC. Lot of other things are happening, and not only Amphi, SEBI, and for all stakeholders are very serious, because they are of the firm opinion that an informed investor is a successful investor.
Before we wrap up, if I had to ask all the three of you, just one sentence advice that you, if you had to give to an investor for wealth safety and most importantly, not to fall prey, not to fall victim to a scam, what would that be? Starting with you.
So my one liner would be: keep it simple, invest for long term, ignore the noise, and think for your goal, and be an informed investor.
Right, Mr. Sabharwal.
So we call it SLR. First is safety, then there's the liquidity, and third is the return. In this order, we have to evaluate the product. If your money is not safe, then what is the fun of return? And then the liquidity, as and when you require the money, which money should be available to you. And third is the return. If this is SLR, we follow the metrics, then probably all our things can be taken care of.
This is a must, because talking of all the other things, every individual, every citizen has to be an investor in right earnest. Then, of course, in the initial years, you have to look at the safety as well. But at the same time, those who are young have to look at the maximization of the return by looking at their risk appetite and looking at the risk of the product simultaneously.
Right. So with this, we have come to the end of our conversation, our group chat, and this has been a micro masterclass in creating wealth safety. And hopefully our viewers and listeners will have key takeaways in how to build a solid portfolio, and at the same time, and most importantly, not to be a victim of any fake investment offers and cyber investment fraud. I'm Flora Swai, and thank you for joining us. Thank you, experts.
Thank you very much.
Bye.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.